Welcome to the Real Estate Explainer podcast, where we talk about anything and everything real estate. I'm your host, Brian Kixula. Hey guys, welcome back to another episode of the Real Estate Explainer. Today I've got Dane on the episode, and we're going to be talking about crypto today. Crypto and tying it together with real estate, which is something that I just have no idea about. So I'm excited to learn a little bit. Why crypto?
In fact, I sold all my real estate, my entire portfolio, multi-million-dollar portfolio, to focus on crypto right now because at the end of the game, we're in a game where we're trying to grow our wealth as fast as humanly possible. And in the end of the day, I want to use the tools that are most efficient at wherever point we are in the market to do that. The most efficient tool, and there's nothing even close for the next year.
All right, you're going to have to explain, and let's go ahead and back up and at least figure out how you built up your real estate portfolio, how you got started. I believe we were talking before I hit the record button that you're originally from Utah. I went to the University of Utah myself way back when. And did you start in real estate in Utah, or did you start in a different market? Did you jump into the wholesale side? Were you retail? Just walk us through your journey.
Absolutely. So I'm from Utah. And I love the idea of investing in your own backyard. At least initially when I started, it made a lot of sense to me. And so I said, let's go ahead and do this. I went and I was somebody that had really bought into the idea of getting a good education so I could get a job with good benefits and a good 401k. And man, I went and got my master's degree for the hopes that that would make it so that I didn't need to sell anything. I was scared to death of sales. And so I wanted a tool. I thought I could educate myself out of needing to sell and still make a nice salary. And I found very quickly that I was going to have to kiss a whole lot of butts and do a lot of things that I didn't want to do in order to climb the corporate ladder. And that was exhausting. In fact, one of my first bosses assigned people in my department to follow me around the office and report back to him about how I was using my time, because apparently he didn't think I was using it effectively. And after enough of that, I said, I've got to find a way to pivot. And so I did what a lot of people do to try to make an extra few bucks. I started listening to podcasts, reading books. I'm on YouTube. And the same theme kept coming up when I'm trying to figure out ways to make more money. Real estate kept coming up over and over. And I found this crazy thing called wholesaling, where they said you didn't need any cash or credit to be able to make some money. And I said, that sounds great. So off I went. I was the second to last hire at the last company I ever worked at before they froze hiring. 3 months later, they laid everybody off. In my division in Utah, there was 100 and a little bit over 100 people. Everyone was laid off. And that was one of the biggest blessings I've ever had in my life. And I say this over and over when I tell this story. At the end of the day in my life, I'm just trying to pick up the crumbs that God leaves before me to try to walk the path they'd have me to walk, because I have a better life when I have an open heart I'm willing to follow. And this was one of those times where I felt exhilarated. We got laid off and I walked out of the office and I called my wife and I said, hey, I think I'm going to try that real estate thing. And I've been trying part-time for 6 months at this point, but doing it is, at least for me, was really difficult on a part-time basis.
It is, absolutely. And were you wholesaling? So calling, dialing for dollars, knocking on doors,
marketing, and taking sellers' calls while I have my full-time job. I'm running off to the bathroom or the hall to take a call. Like, it was a mess. Yeah. And so she said, go for it. I have a great wife, incredibly supportive. And she has a father that's been an entrepreneur. So it was good that she had those foundations. I did. I went off to try to figure out wholesaling. I didn't have a ton of money. And I'd essentially blown through my marketing budget. And 6 months later, I'd spent $6,500. I'd done one little tiny deal where I'd made $2,500 of it back, and I'm in the red. And my wife says, you know what, Dane, I believe in you, but we've got to make some money. We're pretty well out of it. You've got to either do a deal or you need to get a job. It doesn't matter to me which one, but we've got to make some money. And I said, you're not wrong. Figure this out one way or another. So I committed to her that I would apply for some jobs at that point. And I don't know if you or anyone in your audience has ever had an experience like this. I call them God experiences, where I would go to put my hands on the keyboard of my computer to apply for these jobs I told my wife I'd apply for. And physically, it was like, yeah, everything about it was wrong. I couldn't do it. I would go and put my hands on the keyboard, and everything in me was screaming, "What do you think you're doing?" And so
because can you imagine if you had gotten one of those jobs? Talk about taking a wrong path.
Oh yeah,
so
and I wouldn't
absolutely,
be here.
Yeah,
Absolutely. So I kneeled down on the ground and I said, "Oh God, I've been working for 6 months, pretty hard in my opinion. Things aren't working out, but I feel like I'm in the right place. If I'm in the right place, though, you've got to shake some things loose because it's not working how I'm currently working. Just show me the way." And I felt this overwhelming feeling of peace and that everything was going to be all right. And so I said, enough. And I committed right then and there. I said, look, I'm gonna get gone to a conference recently. I said, I'm gonna get this list is a tax delinquent list from my county. So I'm gonna get this list and I'm gonna call it over and over again until I either make some money or we lose the house and cars, because I know I'm in the right place. I didn't tell my wife this because she wouldn't have been pleased, but that was the commitment I made to God that day. And I want to give a caveat that this experience is not par for the course. This is an exception and not the rule. You listen to enough podcasts and everyone wants to highlight the really cool stories. Everyone has a desert they have to walk through, and sometimes you end up in a beautiful paradise. Sometimes you end up in a small paradise. For me, it was a big leap. In about 2 weeks, I'd spent 14 hours on the dialer. I was using the old Mojo dialer, and I called into a seller. He said, I gave him the spiel. I gave him a spiel, and I said, would you consider selling your property? And he said, no. And then there was a long pause, and then he says, it's not worth anything. And I said, or I thought in my head, I haven't gotten this response. And so I just asked him, I said, tell me, what do you mean? And he essentially bought this hoarder house in 2010 after the market had crashed. It was just full of crap. And he had no idea how bad a shape it was in because it was so full of stuff he couldn't do a proper inspection. And so he'd cleared out the house. He'd moved his stuff in, slept there for one night, and said, I can't stay here, and been living on his friend's couch for the last 6 years. Wild.
So he had this house and he's living on a couch.
Yeah.
Wow. That's crazy.
And the house is just sitting. He's paid cash for it because he bought it at auction. And it's just sitting there. The only debt against it, or the only reoccurring money, are the taxes that he hasn't paid.
And they're delinquent. And he has not paid them.
Exactly. And I walk into that house. I joke not. There's a stack of mail that's multiple feet tall of people that have been marketing to him for years. And I ended up finding that deal because I just called him at the right time. We negotiate a deal. I said, hey, if I could just make you whole, I could get you the money back out that you paid for this deal. Would that work? And he's, oh my gosh, if you could do that would be incredible. And so I said, great. And I drive over to his house immediately. We sign a purchase agreement, and I'm brand new. I have no idea how good a deal this may or may not be. But in my mind, I'm like, there's got to be something here. And I'm like, maybe I can make 10 grand or 15 grand off this if I assign it as a wholesale deal, right? And grace be to God, it was incredible. I found myself 30 days later, tons of roadblocks, bankruptcy issues, tons of issues. But I found myself 30 days later where we overcame those. We closed on the deal. I signed that, and I made $70,000 net profit to me in that one single deal. That was more money, or about the same amount of money as I was scheduled to make the entire year at my job.
And that's an assignment deal. You assigned that out.
Yep.
Oh, that's amazing.
Assignment fee.
Wow.
Yeah. Crazy. So a huge blessing. And so that's how I got started in real estate, and went and built a 7-figure flipping and wholesaling company. And we were really blessed, primarily doing deals just based in Utah.
Okay. And where in Utah? What area?
All over. So primarily in Salt Lake County, though. Salt Lake County is where most of the action is. That's where the capital is of Utah and whatnot. That's where most of the people live. So primarily Salt Lake County.
I'd like to thank today's sponsor, Cost Seg RX, a cost segregation company. If you're interested in a cost segregation study, log on to realestateexplainer.com. landlord.com and click the cost segregation link at the top of the page.
Everybody says that if you're in real estate, you're missing the whole premise if you're not keeping any of it. And I loved the idea that with cost segregation studies, I could make it so that I didn't have to pay any taxes because I had enough depreciation. So I figured out the math of how that worked. I qualified as a real estate professional. And so I would just do enough deals. We were flipping and wholesaling. I've done hundreds of transactions. We would do enough deals during the year. And then, like many real estate investors, I'm scrambling the last quarter trying to say, okay, how much are we projecting to make? And then how much real estate do I need to buy and do cost seg studies to make it so I don't pay any tax?
Yeah, and this is in the last quarter of the year. So you're really scrambling at this point because you're not buying these properties retail. You're trying to get them at wholesale prices and close them within just a matter of a couple of months at best. Because you got to place them into service as well. So you need to be ready they need to be ready to go.
Yes. And we had enough volume and I was blessed to have enough capital that we could make that happen each year. It wasn't a huge deal. We just had to spend the time and find the deal flow. So that was great. And I haven't paid taxes in years because of all the depreciation that I got from that process. So I built up a rental portfolio of about 25 units. I bought some properties not only in Utah but out in Tennessee as well, and it was it was good. It was good to be able to have that experience and see how that business worked. But man, I remember doing the math, taking a step back, and I'm trying to be really efficient, right? I'm Airbnb-ing some of them, and I'm trying to be real strategic about how we can get the rents up as much as possible. And man, at least in Utah, a really good rental property, maybe you're making, and there's some people that have some unicorns that are doing bigger numbers, but to make $800 cash flow a month per door is a lot. Most people are making more like $300 to $500 maybe.
Or $75.
Some people are negative. Some people are negative every month. Right?
It's a reality, yeah.
In fact, I would argue most landlords, when you factor in the CapEx and the cost to turn over properties between tenants, most people are negative. Yeah, negative cash flow.
And that's something that's just super key when you're looking to buy properties. You really want to run the numbers. And I've talked about it on a couple of the other podcasts. It's analyzing that deal before you acquire it. Make sure that you understand what your operating expenses are, what your rehab costs are going to be, what the turn costs are. So if you're in an area that is transient, you know that your tenants are moving out every 6 months because it's a college area, or if you're buying in just say a city that it's no longer college kids, maybe it's younger professionals, they're going to stay for a year and then they're going to move out. Every time they move out, you're going to have to come in and refresh that property, whether it's new carpet, painting, whatever it is, and then rent it out. So you're going to have holding costs. So before you make that acquisition, I think it's so important to really underwrite the property, underwrite each and every property before you buy it for exactly what you just said. But getting back to the ins and outs or the day-to-day, I don't want to say grind, because owning real estate and being a landlord is not always a grind. You can have these steady tenants that stay for years, but sometimes, and I think this is going down the path that you're going to start talking about, you have plumbing issues. You have hot water tanks that blow.
You could have one bad tenant go through and destroy your property, and literally the cash flow that you'd projected for that property could be gone for 5 or more years from one bad tenant.
So this is a sales pitch on my side for cost segregation. So with cost segregation, one of the things that you can do with the study is partial asset dispositions. So if you have a cost segregation study done on a property and you know what all the component costs are, and you have a tenant come in and blow out all the walls, destroy the doors, ruin the plumbing, you can take a partial asset disposition in the year that you're removing those assets. So dispose of the asset on your fixed asset schedule and then bring in the new assets. And we could do another cost segregation study on the capital expenditures that you had that year. But you're absolutely right. You could have a tenant that will literally pour cement down your pipes and really create some real headaches for you. Yeah.
Yep, absolutely. I haven't had any tenants pour cement down pipes, but I have been on the news because the DEA did one of the largest drug busts in one of the cities that I owned a little duplex. And I became a tired landlord. Everybody talks about marketing to tired landlords. I became one very rapidly on that project. And I found that, here's the thing. So most people get into real estate for the hopes that one day they can sit on a beach while the money just rolls in and they can have freedom. And if you do the math, I mean, we can do the math right now. Let's say on average, you make $300 profit per door per month, which I think is like a pretty reasonable average amount if you look across the country. Would you agree with that? What amount would you say is?
I couldn't really say that because then you're not looking at the appreciation, the depreciation, and everything else that ties back in.
Cash flow, yeah.
But if you're looking at cash flow, again, I don't know the averages because not a big fan of averages because what's going on here in Sarasota is not going to be the same thing that's going in Salt Lake City or anywhere else. But let's say $300 per month cash flow average deal.
So how much money do you need to make in order to live the lifestyle that you want to live? Even if it's not Lambos and mansions, like many people hope to get to, let's just say it's like a reasonably comfortable life where you can go on a few vacations each year, pay for whatever you want to pay for your family. Like that's going to be, with inflation, that's going to be like $240K a year, I would venture to say, which is 20 grand a month. 20 grand a month. That's what you need to get to. If that's your projected lifestyle, you can scale these numbers however you want. This is what we're going to use for my example. So if we say 300, we just say you got to make 20K in a month. We're going to divide that by $300. You need 66 units to be able to go and hit those targets. And if you're doing that, that is very painful to try to scale to if you're doing it with single families. From my experience, I would never go and buy a bunch of single families again. Never. Because you don't have the scales of economy. You have none of the efficiencies there. And I would only buy in larger chunks for those purposes that things are easy. Now, there's many examples out there of guys that have huge single family portfolios. I think that's great. That's just not a strategy that I personally like because I want less headache and more freedom. And that's everything to me.
And I think that's a lot of people's worlds right now as they're trying to dial down the noise. It's turning the volume down. I feel like we've gotten so caught up in you're receiving 100, 200 emails a day. Your phone's ringing constantly. You're booked throughout the day. What do you want to do? I'd rather go for a walk around the neighborhood or go for a jog in the morning, whatever it is. So let's talk about this strategy where we brought it up at the beginning of the show. And I think it's fascinating to me. So you got started in real estate, you grew a nice portfolio, you're generating a healthy income, and crypto. Okay, sell me on it. Crypto. Yeah, I'm interested.
Let's do it. So my wife came to me a few years ago. This was about 3 or 4 years ago. And she had this cool family vacation she wanted us to go on. And I said, great, let's do it. But I want to get a few more deals done first. And she looked at me and she said, you know what, Dane, you told me that you built this business not only for the financial benefits, but for freedom. And you're not particularly free. And keep in mind at this point, my team is pretty well running all of our flips, all of our wholesaling. I've got operations in place to run the rentals. But still, if there's a lawsuit, where if you have volume in business, there's going to be lawsuits and there's going to be issues that you as an owner are most likely going to need to step up and help with. And so I just don't have the freedom that I would prefer at that point. And so once again, just as she was wise before in my venture into real estate and saying we've got to make some money, I said, you're right. And I just don't have the freedom that either of us would like right now. And so I determined to figure out a strategy where I wanted to make way more money than I currently was making. I wanted to do it where it came in much easier and gave me far more freedom and lifestyle flexibility. And I took a step back, just like I had when I was trying to figure out real estate. And I prayed. I said, God, I want to find a way to be able to hit these metrics and hit these goals. So lead me to an opportunity where I can do this. And so I took a step back. I had some friends that were doing cryptocurrency and had made a ton of money doing crypto. And I started talking to them and I said, you know what? I wonder what would happen if I took the same time that I'm spending in real estate each week, what would happen if I just spent that in crypto? And I didn't know what would happen, but I said, you know what, I'm willing to try. Let's just see. And it was pretty miraculous. You're just trying to find the crumbs that God leaves for you to live the best life that you can. And within about 4 months, I'd built a crypto portfolio off $100,000 that was cash flowing $50,000 a month on $100,000. And I was sold. Count me in on that.
That's
dream.
insane.
It was
unbelievable.
It was crazy.
That's amazing.
Yeah. And crypto's volatile, so it doesn't always do that. But the cash flow I was making from crypto put everything to shame in such an enormous way that I was like, there is something here, and I bet you I could figure it out. And so one of the really cool things that I found is that there is an utter and complete lack of sophistication in the crypto markets. And so somebody like your listeners to this podcast that have some sophistication and experience from building a real estate business can apply a lot of those same lessons they've learned to cryptocurrency and make way more money in this next year than they can make doing anything else. And it's not even close.
So step back, explain the cash flow in crypto. That's a disconnect in my mind. How is there cash flow in the investment?
Yeah, absolutely. As far as crypto is concerned, there's a lot of different ways to make cash flow. And I'm not going to get into the nuts and bolts of it, but you probably heard of Bitcoin mining before. Have you heard of that?
Yes.
So there's no money to make in Bitcoin mining anymore, but there's other forms of mining that you can use to make passive income, which can be incredibly profitable. That's what I was doing to make the $50K a month. There's other things called staking, which is another mechanism on the blockchain that you can use to make passive income. I've made thousands of dollars there. And there's another method called liquidity providing, where, think about it this way. So liquidity providing is a unique one where a lot of your listeners are probably familiar. They might have a Coinbase account or crypto.com account. All right. And everyone has to sign a user agreement when you set up one of those accounts, but nobody reads that agreement. And I'll give you the long and short of it. That agreement says that they will give you an account. You are going to pay fees when you trade the assets on their platform. And if they go bankrupt, they are going to seize all the assets in your account to pay their creditors. And if there is anything left in the end, you'll get whatever the leftovers are.
That sounds terrifying.
It's terrifying. You take on all the risk with limited upside, and they earn billions of dollars in fees every single year from people trading on these platforms. It's crazy. It's craziness. But crypto was not invented to make the VCs and the big companies and the bankers more wealthy. It was made to give you and I a shot in a financial system that was built where your money can actually become more valuable over time. And so that's the promise of crypto if you can learn how to operate. So back to liquidity providing, instead of going to Coinbase and there being all the crypto there that users can trade between, we can go to decentralized platforms and I can be the one that puts the crypto up that allows people to trade between the assets, or you can, or anyone else can, and you can earn fees and rewards from doing that instead of Coinbase earning them. And in fact, a cool example, there was a platform that launched a few months ago. I knew the game. I know how liquidity providing works. So I went in there. I put $100,000 up in crypto assets. I put them into it's called the liquidity pool. So people I'm helping facilitate trading. And I set it up. It took me 5 minutes. I left it alone. I came back in 30 days, and lo and behold, I've made $20,000 in passive income, truly passive income. I didn't look at, I didn't manage, I didn't talk to any tenants, dealt with no toilets, no rehabs. Came back 30 days later, and there's $20,000 in profits I made on my $100,000, and I'm laughing all the way to the bank. And so there's an incredible amount of really cool opportunities that you can participate in crypto. You can do it in a safer manner where no third party, there's no FTX, Sam Bankman-Fried that's going to come steal all your crypto. They can't take mine. The government certainly can't take mine because I know how to operate. I know how to put my crypto in my own wallet in a decentralized manner. I know how to make the cash flow, and I know how to go and 10, 50, 100x my money over the next year without trading, without spending all my days in front of a computer screen, because it's just a matter of learning how to do things in that asset class. And we do it every single day with our community.
You built a nest egg starting out wholesaling.
Mm-hmm.
Then you ended up flipping. You were flipping the properties.
Mm-hmm.
Then you started buying properties. You acquired properties. You were the landlord. Then you took your nest egg that you acquired, that you made through your real estate investments, and you pivoted, and now you're growing your wealth in crypto. And if I'm just to repeat back what you just said, is you're putting up the liquidity. So you're the money guy here.
Yeah, that's a great way to say it.
You're the money guy. So you're going in, you're putting up the asset, and you're allowing people to buy and sell the asset within a platform. So
Mm-hmm.
you're saying that's where your risk is limited. You're still going to have the volatility of that specific asset, but you still own the underlying asset.
Right. And I want the volatility. The volatility in crypto is a beautiful thing to the upside if you understand the timing. And that's the problem that most people make in crypto is by the time people like me are on social media talking about all the cool things we bought with our gains, if we're buying cool things with our crypto gains, that's because we sold. That's because we don't think that things are going to continue going up. And that is not a sign to jump into the market. That is the sign that you missed the opportunity if you didn't buy anything. And if you do have anything, you might want to consider selling and taking profits because this game won't repeat again for 3 more years.
And again, I know nothing about crypto. It's something I'm just not, it's
Sure.
not my background. Real Estate Explainer is not Crypto Explainer. And I think you alluded to that. You've got a community. And before we wrap up the call, I just want to, ask, how can people get in touch with you? How can they learn more about crypto? What's the best way to get connected with you?
Yeah, we do a YouTube show almost every single day, Monday through Friday, where we talk about what's going on in cryptocurrency. We talk about real estate too. In fact, we're doing some really cool things where we're working on some solutions to bring real estate to the blockchain to make it so that people, if they want to syndicate deals, they can come and do it to a wider audience. One of the largest untapped places that real estate investors are not looking to raise money, I feel like no one but us, is the cryptocurrency world. Because crypto works on typically 4-year cycles up to this point. We are heading into the Bitcoin halving right now, or in April, so next month. And we should theoretically, if this cycle is like the last 3, we should have a really strong bull run for a year from April to next April. So you can grow your wealth through cryptocurrency. And we're working on bringing real estate to the blockchain where those guys that are going to make a ton of money, where literally some of my friends have turned hundreds of dollars into $1 million. That's pretty wild. Where those guys are going to need places and they're itching to get into real estate. They just don't know how. And so we're going to give them a platform where they can use their crypto gains to buy real estate directly on the blockchain. So people want to come and dip into that bucket. They can come and they can put their deals on our platform and we can help them fund it, which will be a ton of fun. So come and check out our YouTube show. I'm on Instagram, Money Talk with Dane. You can find me Money Talk _Dane on Twitter as well. And we'd love to hold hands. That's what we do is we make it where our guys, our mostly real estate investor network, can plug into our community. We literally can help anybody get set up in crypto with no previous experience in a couple of hours, get them rocking and rolling and help them build a portfolio that once it's built, they truly can set it and forget it for about a year, come back and take profits and theoretically make more money just doing that in a few hours than they do in anything else they could do in the next year. And it's not even close.
Thanks for being on the podcast today. And thank you for the information. Talk to you soon, Dane.
Thanks, Brian. Bye.
If you'd like to get connected with today's guest, log on to realestateexplainer.com and click the Get Connected button on the homepage.